All right, let's get right into it. We've all seen the headlines, right? The flashy stories of huge wins and traders making a fortune overnight. But what if I told you the real story, the one backed by data, is almost the exact opposite?
Take a look at this number, over 90%. This isn't a guess. This is the statistical reality of how many retail traders lose money over time. It's a pretty shocking figure, and it's what we're going to unpack today.
So how on earth does this happen? Well, here's our roadmap. We're going to start by digging into this 90% problem. Then we'll uncover a kind of hidden tax that exists in the market. From there, we'll look at how your own brain is basically hardwired to trip you up. We'll even explore a wild mathematical trap that can wreck a winning strategy. Then, we'll flip the script and look at the secrets of the tiny few who win and leave you with a framework for survival.
Okay, so let's tackle this head on. The first thing you need to know is that this isn't just an opinion or some kind of scare tactic. The fact that most traders fail is a well-documented global phenomenon that shows up in study after study. And the numbers, they are just staggering. A study from the London Business School found that retail options traders lost over $2 billion in just 2 years. Another study in India found over 90% of people trading derivatives lost money. And it's not just one type of market. A different study showed that a mind-blowing 97% of futures traders lost money in the long run. The data couldn't be clearer. The odds are just massively stacked against the little guy.
So, why is it so incredibly hard to win? Well, the first reason is actually built right into the structure of the market. There's a kind of hidden tax you have to pay on every single trade, and it doesn't matter if you win or lose.
It's called the bid-ask spread. The easiest way to think about it is like the commission the house takes at a casino. Every time you buy something, you pay the slightly higher ask price, and when you go to sell it, you get the slightly lower bid price. That little tiny gap between them, that's guaranteed profit for the market makers, and it's a guaranteed cost for you. And you really can't just write this off as a small detail. If you trade frequently, this constant friction is like death by 1,000 cuts. One study actually pointed to this spread as the single biggest reason why traders lose. The more you trade, the more you pay this hidden tax, and the higher the mountain you have to climb just to break even.
A former quant trader named Alex Monahan put it perfectly. He said, you start every single trade from behind. You have to make up for that built-in disadvantage just to get back to zero before you can even start thinking about making a profit.
But the challenges aren't just out there in the market. Nope. Some of the biggest, most dangerous traps are actually wired right into our own brains. It turns out we are not the cool, rational machines we like to think we are, especially when money is on the line.
There's a Nobel Prize-winning idea called prospect theory that explains this perfectly. It proves, psychologically, that the pain of losing, say, $1,000 is about twice as powerful as the joy of gaining $1,000. And this one little imbalance in our wiring, it causes absolute chaos for traders.
Here's how it plays out. When your trade is winning, that feeling of joy is there, but it's not super intense. So you get nervous. You want to protect it. You become risk-averse and sell way too early just to lock in that small win. But when your trade is losing, the pain is intense. So to avoid that pain, you become a risk seeker. You hold on, maybe you even double down, hoping it'll come back. And you'll let a small, manageable loss turn into a disaster. You're cutting your winners short and letting your losers run. It's the exact opposite of a winning formula.
Okay, now for what I think is the most mind-bending reason traders fail. It's a mathematical trap where, get this, even a profitable strategy can lead you straight to blowing up your account. Seriously, think about that for a second. If you have a real edge, a system that on average should make money over time, can you still go broke? It seems impossible, but the answer is a resounding yes. So let's look at this chart, because it explains everything. It shows the probability of going broke. The more you move to the left, the more lottery ticket-like your trades are. A tiny chance to win, but a massive payout if you do. And look what happens. Your probability of ruin just skyrockets. Why? Because you are far more likely to hit a long, painful losing streak that completely wipes you out before that one big win ever has a chance to show up. So, with all of this working against you, does anyone actually win? Yes, they do. But it's an incredibly small group. And their success proves that skill in trading is a very real thing. It's just also incredibly rare. A massive study looked at every single day trader in Taiwan over a 15-year period. The results were just stark. After you factor in all the trading costs, less than 1% were able to predictably make money year after year. But then the study showed something even more important. They sorted the traders by how well they did, and then they watched what happened next. The top traders? They kept on winning, even after fees. The bottom traders? They just kept losing. That persistence proves it isn't just luck. There is a huge measurable difference in skill.
And that brings us to the most important part of all of this. If failure is the default setting, how can you survive and maybe, just maybe, join that tiny group of winners? It's not about a magic formula. It's about a disciplined framework.
First, you have to invest in education. Pro traders use simulators for years before they touch real money. Second, and this is non-negotiable, master risk management. A small mistake with too much leverage can end your career instantly. Third, you have to fight that hidden tax we talked about. Don't overtrade. The less you trade, the less you pay the house. Fourth, conquer your own biases. You have to build hard rules to stop yourself from doing what feels natural, which is selling winners and holding losers. And finally, be realistic. This is not a get-rich-quick scheme. You are competing against some of the smartest people and fastest computers on the planet.
So when you boil it all down, success in this game isn't about being a genius who finds one big trade. It's a game of survival. And it's one with relentless discipline, obsessive risk management, and just a deep, healthy respect for how hard this really is.
So I'll leave you with this final thought. Now that you know about the math and the psychology that are stacked against you, what is the one thing you can do, starting today, to manage your own risk just a little more intelligently?